Okay. So generally market tape on the extreme point. I think this is a clear to you because
Yes.
when market tap on the extreme point, then very highly chances market take a reversal to the upside, correct, and reversal into downside. Okay. So in this case, as you can see here, market tap on this zone and then market create break the structure, and this is a market continuation downside, and this one is the first move for the reversal, and this one is also known as change of character, but we can mark also a boss. Okay, because boss chalk is no different. Actually, this different name in a different, but both are same. Okay, because both are structure break. Okay, so market break this structure, and then what happened? Market must be back on the our order block on the PY zone. Okay, when we can take an entry for the buy and sell, correct. So in this case, you can see market break this structure, close above you. So this one is become our valid order block, sorry, valid structure. And why this one is our measure, I mean measure high or low is here, right? And then market break the structure and then break of structure. Why this one is a measure high? Because it took out the previous minor structure is here, correct. That's why this one is a confirm high, and this one is also known as inducement, because market is a bearish. Okay, if I hide this demand zone, then we can see market momentum is a bearish. And then what happened? Market taken out this first inducement and then push downside, and this become our recent high or low. And then what happened? Market break the low. Then again, after taking out this IM5 external liquidity, and market push higher and break this structure and close above it. So after this, what we can expect here? We can expect pullback to the upside. We can expect reversal to the upside. Why? Because market tap on the demand zone, correct. So in this case, you have to say, where is our demand zone? Where is our order block? Correct. So you can see in this case, if I let me mark this. Okay, now you can see in this entire zone, we can see where is our zone when we can take a risk entry for the buy in this case. So you can see here is here first order block here on the aggressive entry, correct. And if you can see below it, there is another order block which is here, correct. But remember here, you can see market mitigate this order block already. So there is
Correct.
very low probability that market take on respect this zone and then take a pullback and push downside. So there is mitigated order block. So I don't think this is a work for you, correct. Then push little bit in a downside, then we can see this is a large wick is here, correct. And in this case, what we can here, we can refine into lower time frame here at this point. And then we can see if everything is available in a lower time frame, then we can take a risk entry for the buy, because below this order block, below this zone, there is not any unmitigated zone. You can see this
So,
order
all
block
right.
is also mitigated, correct. Everything is mitigated. So
So, all
yeah.
right. And not to cut you off, Khan. So the
Mhm.
candle that you have as the order block as the wick, I
Mhm.
had the whole candle, that whole candle as a order block.
Mhm.
So when I looked at it, I was like, well, that's been mitigated once I had it as the whole candle,
Mhm.
rather than you have it as the wick. See, I didn't do the wick, I did the whole candle. So that's why I was like, oh, well, there's no order block because all the order blocks were mitigated.
Mhm.
So when do you know when to just use the wick or use the full candle?
Actually, to mitigate any order block, just market tap on the like order block. This is enough for the mitigation. Like in this case, Correct. This one is unmitigated. This one is mitigated, and this one is also mitigated. Correct. Yeah. Correct. So these are mitigated order block, and this one is not mitigated. Why? Because market did not tap here. You can see here. This one is a little bit gap between this zone and this zone. Okay. And at this point, what we can here, we can refine into lower time frame to see actually if everything fit in your criteria, then we can buy here. Okay. Because sometime what happened, price, you can see market open here and then push higher. And this one is a little bit partially mitigated here. Correct. So in this case, you have to switch into little bit lower time frame to see more clear picture here at this point. Okay. Let me see exactly in a 4 minute. This zone, refinement zone is here. And 3 minute is still. Okay. 2 minutes, I think, mitigated, but same zone. And 1 minute you can see here exactly. Correct. So this point become our more high probability zone for the buy. Okay. If you can see here, if this one is mitigated by something is here and this one is not mitigated in a 1 minute, then you can use as per the 1 minute order block. Correct. At this point, if this order block is already mitigated, then you can use as per the 1 minute structure. Okay. So in the future, if market push downside, okay, so now where is our high probability zone for the buy? First one is an inducement is here. This one is a minor inducement. And if I see perspective at 1 minute structure, so this become our first inducement and tap on this order block and push higher. But this is not high probability because this one is a 5 minute aggressive order block. Correct. So this one is not, because high probability entry after engineering liquidity on the engineering liquidity above or below. Correct. So in this case, where is our engineering liquidity? This low act like engineering liquidity. Correct. Why? Because below this unmitigated order block in a 1 minute chart. Correct. And why I did not take this one, as I mentioned in I think previous recorded videos and some weekly webinar, that between the inducement and engineering liquidity, if any order block create between this zone, so this order block act like a smart money trap. Okay. For example, this one is our inducement order block when we can take risk for the buy. Correct. And another order block is here. And I think this one mitigated. I don't know. But this one is unmitigated. Correct. So how market actually work? If first one is a failed, then very highly chances second one is also failed. And this at this point, what happened? Market push higher, taking out this inducement and mitigate something, and then again push downside to mitigate extreme, and then push higher. And this one is last extreme zone when we can take entry for the buy. And this is a high probability zone. Okay. You must be bid for the inducement, at least inducement and engineering liquidity. Correct. So this one is high probability zone for the buy. Actual move happen after tap this zone. Once market tap this zone, then we can see aggressive move to the upside. Correct.
Okay.
And one more thing, if market did not mitigate this zone, correct. So what happened? If market did not tap this order block and just sweep this engineering liquidity, then what we can hear? So market sweep this low and price close above it, correct? Then we can buy on the first recent high broken this structure and push higher, and price must be taken out this low but close above it. Okay, so we can apply anti-type 3 where I mentioned about liquidity sweep, correct? So in this
Yeah.
case, engineering liquidity taken out and market push higher and mitigate something here, and then we can see continuation upside, correct? So let's see what happened next here. Okay, so as you can see here, as I mentioned here, market must be taken out this low. Order block is not necessary to mitigate, to push higher or push lower. Okay,
Correct.
because main thing is liquidity, not order block. Or liquidity is sitting above or below on a recent high and recent low. So this high is our extreme low when most of the liquidity below it. Why? Because everyone, most of the traders buying here, okay, and someone buying here on this aggressive order block. That's why this move happened. And this one is a smart money trap actually, and then push downside. If market close below it, engineering liquidity close below it, then you can buy after take apply anti-type 2, which is I mentioned. If market close above or below on a single high or low, then you can apply anti-type 2. If, and one more thing, you can apply, now you can take Y entry once market mitigate this zone, correct? But market must be close below it. But in this case, market sweep this high, sorry, sweep this low. When market sweep this low, then very highly chances market push upside. You have to apply anti-type 3. Okay, market close above it, sorry, right? So where we can buy? We can buy here on the next candle open and put the stop loss just below it. Okay, and target, our final target will be 15-minute high.
Correct.
Okay, so 15-minute high is our final target, and first entry when market sweep the high or low and open the next candle, and then you can buy, correct? So this is an anti-type 3. Okay, so let's see what happened next. And our entry mitigated, activated here. Okay, all right. And one more thing is here I want to mention here. Market break this minor structure is here. Okay, once market break this structure, this is a minor structure, then what you should do here, you can buy here again, take the new entry for the buy, correct? And this, in this case, this one is our zone when we can take a buy entry for the upside. Yeah, but if you are putting the stop loss just below it, so there is a highly chances market taken out this low like this and then go higher, right? And this low act like inducement, and then market must be taken out this low and push higher. So this low you can add more position. And sometime what happened, market did not create same scenario, and then market break this structure, mitigate this zone, and then go higher, correct? And this inducement push upside, mitigate something here and push upside. Okay, so
Correct.
where is our stop loss is a safer, correct? So our safer stop loss is here actually. Why? Because this is our major low. Okay, and this is our major low when you can put your stop loss just below it. This one is our safer stop loss. This one is not, because there is no liquidity sweep here. If liquidity sweep, then we can put the stop loss just below it. Okay, so in this case, you have to put stop loss just below it, right? Let's see what happened next. All right. So market creating, excuse me. This is relevant equal high actually, and this create a liquidity. This thing create a liquidity as I mentioned in a ebook. Okay, because this is our relevant equal high. When market did not break this high, and then what happened? Like this. Like this. And this one is our relevant equal high. And then what you should after this, market taking out this low is here. And at this point, you can buy. And this entry is our high probability entry for the buy. Correct? Because market take out the liquidity. Okay. So in this case, what happened here? This low is minorly sweep here, if you can see here. Correct. So in this case, minor liquidity sweep and taken out the previous low. So this one is indication for the liquidity sweep here. Correct. So where we can buy? Actual our candle is here. Last selling candle before the buy is here. This one is large candle is here. Okay. So in future, if market push downside, okay, then we can buy here. And this, in this case, you can buy here and you can put stop loss just below it. Because market already sweep this liquidity. Market taken out the previous low. So this one is our more safer entry compared to second entry, which I took here. Okay. Let's see what happened here. I don't trade a J, you know. Okay.
Yeah.
Yeah. So in this case, market did not mitigate this, and this entry is a miss. But you can see we got two entries here, and when market broke the recent high, then you can switch our stop loss on a break-even point and take some little bit partial, and then follow the 5-minute structure to scale more entries, continue to the upside. Correct?
Correct.
Yeah. Okay.
So this is another position that I was actually waiting on, was this right here. And my order block was right below it after it took out liquidity. But I just wasn't sure, so I didn't take the position, and I ended up missing the that entry as well.
No, this one is liquidity. Correct. And so
in
this
the 1 minute there'll be a type 1 entry.
This one.
Yep, correct.
Okay. Market taking out this low. After mitigate this, and market also taken out this low. And where is our engineering liquidity? You have to see in this case. So this low is our act like engineering liquidity, and below it there is another order block is here. And I think here this one is more cleaner.
Yeah, that was my more extreme.
Exactly, because below this there is no unmitigated zone when we can take buy risk entry, buy entry, right? And then how we can take entry here? Market taken out this extreme, and then you have to apply here entry type 2 because market closed below it. Correct. So you can apply into 1 minute to see exactly what price is going on here, and then you can apply 1 minute structure, then you can buy. Correct. Because this is our engineering liquidity point, and price never tap on the order block. Remember on this thing. Price never tap on the order block before the buy or sell. This one is the first inducement, and this one is the engineering liquidity. This is the extreme order block, correct? And this one is our inducement order block, first order block. There is a 50-50% chance that market may be pushed higher and lower, correct? But extreme is high probability entry for the buy, correct?
Correct.
And in this case, this is a 5-minute structure, and we can switch into the 1 minute to see exactly what happened here, and you can apply entry type 2. Entry type 2, price must be closed above or below it. So in this case, market close below it. So you can apply entry type 2 in a lower time frame to see exactly, then you can buy. If price sweep this low and close above it, then you have to apply entry type 3. If price mitigate here, right, and then you have to apply entry type 1, correct? So basically 3 types of entry you should apply during the entry. So we can apply here entry type 2. So did you taken out this trade or not?
No, I missed it because the first one, that's the one I was waiting on, but I wasn't sure, so I didn't take it. And then once I saw that the order block got taken out, went down to engineer liquidity, I already missed it by then.
Okay. This and this one is here. I don't think it is here. So these are possible entries because every low has been taken out the liquidity. This low taken out this, and this one is the unmitigated order block, and we can buy here. And I don't, yeah, partially tap here. This move. Last selling candle before the buy is here because this big swing indication for the bearish. Okay, break the structure, tap on this order block and push higher. Again, market break the structure, tap on the single candle order block is here and push higher. Break the structure again, taking out this low and anti-tap 3 and buy. So these are actually a little bit tricky for you. So it's take a little bit time to understand these things because these are combination of anti-tap 2 and 3.
Okay.
So any more?
I think the problem for me is when I jump down to the lower time frame, I'm waiting for the liquidity sweep
Okay.
before, and then waiting for price to come, and take it out, either entry track 1, 2, or 3. But sometimes like I won't get it at all. Like I won't see the market won't give me the liquidity. Or for instance, how you just drew it up right now, you said that it's more of an advanced level. Like I would definitely miss that. Like I wouldn't see that because what I'm waiting on is something that's more like visual to the eye. To my eye right now, that's not trained for that.
Actually, when you mark the structure in a 5-minute or 15-minute any time frame, so identify the liquidity first in a higher time frame. If everything fit in your higher time frame to identify the liquidity, then very highly chances you can catch a right move in a lower time frame also, correct? Because once you understand where is a higher time frame liquidity, because in a lower time frame 1-minute structure change in a minutes, like in a 15-minute and 10-minute later market structure change. Okay, but higher time frame structure, it's take a time to change the structure. So you have to understand that where is liquidity in your major time frame, like 15-minute, correct? and 5 minute. Then you have to apply into 1 minute to see
Right.
exactly what happening in a lower time frame. Then you can buy as per your criteria. Price
Okay.
must be taken out the previous high or low before go higher or lower. This is a thumb rule, actually. Without sweep the previous high or low, taking out the previous high or low, market can't move. Okay.
Okay. I know Lex, you had a question.
Yeah.
Lex.
Yeah. So it was basically about like when to drop down to the lower time frame, but I just watched you do it. So I think after you mark the breaker structure and the inducement, say like if we do time frames from 15, 5, and 1 minute, you will mark the structure on 15 breaker structure inducements, engineer liquidity, internal, external. Then you would drop down as price approaches those zones or that liquidity. When price approaches, that's when you drop down to see if you get the, I guess you would look for entry type 1, 2, and 3 on the 5 minute to see if like price touched a zone and then reversed, or swept a liquidity point and then reversed, and then you would drop down to the 1 minute to do the same thing for an entry, right?
Yeah.
Is that like the method, like the order of operations is what like I call it, like when to switch time frames? And I think you said in one of your latest videos that you'll be doing a video on the multi-time frame analysis, because that's where it can get tricky, where you're going back and forth between time frames, and it's like you have to remember that anything on the smaller time frame, you have to keep it within the context of the larger time frame. And that was like my thing. But I just watched you kind of like go through it, so it kind of like answered my question like while you was doing it. So yeah.
Okay. Actually, to switch into multiple time frame, first you have to see which is our major time frame. As per the intraday day trader, I think 15 minute is a fine to identify the structure whereas market is going on, and then you have to wait for the 15 minute mitigation, 15 minute inducement, 15 minute engineering liquidity. Then you have to apply anti-type 2, 1, 3. Correct. Because if you apply anti-type 1, 2, 3 in a 5 minute inducement and 5 minute engineering liquidity, then you are switching into the 1 minute. I don't think you can say any type of entry exactly, because it's take a little bit time to develop any specific price action. Let me show you exactly what I'm trying to say here. For example, this one is our 15 minute structure, correct? And this one is our break off structure generally. And after break this structure, you have to wait for the at least taking out the previous high, and then you can take action here. Price must be taken out the 15 minute high is here, and this one is our engineering liquidity. If market taken out this high, if close taken out this high and close below it, just like liquidity sweep, then you have to apply anti-type 3 and switch into the M1. Then definitely you can see a little bit minor structure is here. Okay, then you can sell. Correct. If did not change here anything, then you have to wait for the more structure develop, like maybe market push higher. Okay, and then market take this downside move, and this one is not actual move, this one is just a smart money trap. And then finally market push higher, taking out this engineering liquidity, and then you have to apply here anti-type 1, 2, 3 as per the closing. Okay, and if mitigation is here, successfully mitigation is here, correct, then you have to apply anti-type 1. Okay, if market did not mitigate this zone and then just close our weight, then you have to apply anti-type 2. If market sweep this high, this one is our engineering liquidity, correct, then you can go in a 1 minute to see exactly what happening here. then you have to apply entry type 2 or 3 and you can sell. If you are looking same picture in a 5-minute, correct? For example, this one is our 5-minute structure, correct? So what happened here? If you are trying to sell here in M1, I don't think here price can develop price action in a 1 minute at this point, because to develop price action, any specific price action, it's take a little bit time. Okay.
Mhm.
Yeah, 5-minute structure is a bearish, and then you are switching in 1 minute. I don't think price can create here M1 chalk, boss, or sweep liquidity. Okay, so you have to wait for the 15-minute. 5-minute, if you are looking at 5-minute structure, then you have to take entry, direct entry for the sell. You can see if market taken out the previous low, for example, is here. Correct. And in this case, market taken out this high, right? So this one is a liquidity sweep. So now we can see market taken out this, and this one is our high probability zone when we can take it as entry for the sell. So at this point, we can sell here directly. You don't need to switch into 1 minute. If you are looking here, this structure is a 5-minute structure. Okay.
Mhm.
Yeah.
So based on the 5-minute structure, you could just go ahead and take it on the higher probability
Exactly.
green effect. Okay.
Because if you are trying to search here and to see 1-minute structure and waiting for the 1-minute structure on the 5-minute PY, then you can't, because it's take little bit time. Okay, as you know, in a 15-minute structure, you can switch into it work on the 10-minute structure as well as, okay, 10-minute and 15-minute, 20-minute structure. Okay, then you have to apply 1-minute structure as a lower time frame entry.
Okay, so you could just skip the 5 and go straight to the 1 because it's more condensed.
Exactly. If you are looking at 5-minute structure, then you can buy directly.
Okay.
You don't need to wait for the lower time frame confirmation.
Okay.
Okay. So in this case, I'm showing you some little bit example here. At this point, market momentum is bearish. Ignore this previous thing. For example, market is a bearish is here and creating lower lows, which is here. Correct. So what happened here? As you can see, market taken out the recent high is here. Correct. And after taking out this recent high, this one is called our inducement. Okay. And after taking out this inducement, where is our order block? This one is here, but this one is already mitigated by this wick. So you can switch here. And now this one is our correct order block. Okay. So in this case, market did not mitigate this order block. Then you have to see, you can see here, market close above it. And if market close above it, then you have to apply entry type 2. Okay. But if you are looking this situation in a 5-minute, then you can't see any 5-minute in a 1-minute structure, any entry is here. And probably you missed this trade. Correct. And same thing is here. Market break the structure. Correct. Is here. Okay, not here, because in this case, market just sweep the liquidity. When market close below it, so this become our valid pause. So you can see after break this structure, when we can sell. And you can see market take this high is here. Okay. This one is our liquidity sweep. Okay. And then this order block act like our POI zone, bearish order block, and we can sell here directly. You don't need to switch into 1 minute. Okay, at this point before the sell. And if you are switching into 1 minute on same point, then you can see there is no structure, though there's no entry confirmation for the sell.
Right. Okay.
Okay.
So it's best to go from the 15 straight to the 1 sometime. Sometime you will have to miss the 5 to go to the 1.
10 to 15 minutes. Sorry, 10 to
Okay.
20 minutes.
Okay.
Yeah, 10 to 20 minute structure. Okay, wait for the inducement, wait for the engineering liquidity, and then switch into 1 minute to see exactly what happening in a lower time frame. Then buy or sell to follow the entry type 1, 2, 3. Correct. And if you are looking 5-minute structure in a bullish or bearish market, then you have to see first where is our inducement, where is our liquidity. If liquidity has been taken out, you can sell directly. You don't need to go back into lower time frame. Correct?
Correct.
Yeah.
Yeah, that's interesting.
Yeah.
For the US 30, I know the because I got taken out on US 30. Let me see.
Oh.
Like it was some great trade setups. Also missed. I'll tell you exactly what date that is to be exact. Let's see.
Okay.
So Monday, the beginning of this week, Monday, that was my first trade setup.
I think here in this zone.
Wait, hold on. What's going on with my Zoom? Hold on. My Zoom is not working, guys. What the heck?
Can you hear us?
And I can't even get you guys back.
You can
Hold on.
annotate here.
Okay, I'm back. All right.
So when you take trade,
So it was Monday, yeah. So Monday broke the when the 15-minute broke the previous lower high and created wait. Show me the right.
yeah.
Yeah, so I want to say it's around New York session on Monday.
Monday is here. And your
Yeah.
session.
Yep, right around there. Yep.
Yeah.
Yep.
I think.
And I was on the 1 minute.
Did you buy or sell?
I bought.
Oh.
Where you bought?
Let's see. Right there. Yeah. Right there.
Yeah.
Yep. No, before price turned back and took out, yeah, so right there, but right on that order block when it came in there, and I was up and then it came back down and took me out.
Actually, at this point, you can see market the sweep the liquidity. Okay. And mitigate something here. Actually, why this move happen here? If you can see, excuse me. So this is our inducement, correct? Market, after taking out this inducement, you have to sell. Okay. And where is our engineering liquidity? You have to mark engineering liquidity and inducement. So in this case, this one is our inducement, and this high act like a engineering liquidity. Why? Because this is our last high, okay, last lower high in a counter trend before the sell. Why I did not mark this high? Okay, so if you can see here, there is no pullback, just market take a little bit time to push downside, and you can see this last bearish candle did not break the high, as I mentioned in our diagram, which I posted I think 2-3 days ago, where I mentioned there is no pullback, correct? Market must be taken out this high, correct? So then this high, this pullback become valid. Okay, so in this case, this is our last engineering liquidity, correct? So after this engineering liquidity, where is our order block? You can see here, first order block is here, available minor imbalance, correct? And the second order block is here, correct? So if market did not mitigate this order block, then is also fine for your entry. Actually, market must be taken out this high, not necessary to tap this order block and this order block, correct? After taking out this engineering, you have to sell. Okay, after taking out this high, you can sell. Between this high or low is no need to buy or sell. Okay, because between the high, between the inducement and engineering liquidity is most of the time play smart money trap.
Okay.
Okay, so same thing happen here. Taking out the inducement, tap on the order block and push downside. Okay, and then market taking out the engineering liquidity, tap on this order block, but it's not necessary to tap on this order block. Market must be taken out this engineering liquidity and then sell, and this one is high probability zone. That's why main move happen after taking out this high, correct?
All right.
Yeah.
Okay. Okay, I see what I did wrong now. Okay.
Mm-hmm.
Is there any trade that you want to go over, Lex?
No, I'm good.
Okay.
Thank you.
Yeah, you can see here one more example. If you can see, after break this structure, correct, where is our inducement? First recent high, which is here, and this one is our inducement, correct? And where is our engineering liquidity? And some people mark this. This is not engineering liquidity. You can see our main engineering liquidity is here. Why? Because this is our valid pullback. Market taken out this candle's high, correct? So this one is not single leg. This one is moved like this. Sorry. Okay. And this move like this. And in this case, this is not pullback because market did not taken out this candle high. Okay. So that's why
So
this
that's-
one is our single leg here. And this one is inducement and this one engineering liquidity. Correct. And same thing is here. This one is our engineering liquidity and this one is inducement. So what is this? This one is smart money trap.
That is interesting. Huh.
Okay.
Yeah.
After taking out this market tap on this extreme order block, okay, and then we can sell. We can sell here after taking out this because market taken out this high and close below it. You have to apply here anti-tap 3. There is no guarantee, there is no chance there is no probability. I think it's a 50-50% probability to market mitigate this order block or not. Okay, but you are looking here for sell. You are looking here for sell. Okay, but market mitigate this one, then you have to apply entry type 1 and then sell. Correct. And in this point, at this point, you have to apply entry type 3 because market taken out this high and close below it. Correct. Okay, I hope you understand what I'm trying to say.
Can you go down on the 1 minute? I want to see how that looks.
At this point?
Yes.
Okay.
And that's why he was saying the 1 minute might not make the structure.
Yeah.
In this bearish candle close below it, then this one is act like a big, just big, because market cover this previous bullish candle and close below it. So this act like our supply zone and we can sell entry here. First entry, we can take entry here. Okay, because market close below this in general liquidity. Correct. So we can generally sell here. And when market taken out the first recent low, then we can switch our stop loss on break even. Okay. So this one is our most recent low. Okay. Once market taken out this low, then you can switch our stop loss on break even because why? Because we have a chance, another probability to tap mitigate this zone because this one is on the extreme. Correct. Then you can sell. And if you are not moving a stop loss here, then you can hit this stop loss. Your stop loss hit here. Okay. But if you are switch your stop loss here to here, then you can get out on a break even at least. Okay. If you are not take any partial, then you can at least taken out break even. Okay.
Correct.
Yeah. And same thing is here. Market taking out this high and you have to apply entry type 3 is here. Market taken out this low and you can move your stop loss and break even. And then what happened? Market again push higher, right? And then I'll taken out again this high. And again, market sweep this high and again on the next candle. Okay. And then push downside. And you can see we can see there are 3 entries happen to break even, and this move actually gave us real move. Correct. So generally this time sometime this thing happen. Okay, but how we can refinement that which order block actually work, you can refine into lower time frame like 1 minute. If everything is fit, then you can define here that which order block actually work here. So last buying candle before the sell is here, actually is here. Okay, but this one is partially mitigated by this one, and then you can switch into the 2 minute to see exactly to clear candle. Yes, now perfect. Now you can see minor imbalance and complete order block. Correct. So this order block is our high probability order block for the sell. And now you can see exactly tap on this. Correct. And this entry is more high probability. Okay. If price actually break this high, break this supply zone, then market actually wanna go higher. Correct.
Correct.
Yeah. This is a very interesting thing, actually. Okay, so any more question or anything you want to ask?
I know you said you're gonna go over time frame correlation and stuff like that later down in another video.
Mm-hmm.
So I guess I'll just
Actually,
wait.
time frame correlation video I will definitely make, and then I will upload on a Discord as soon as possible. Actually, last 2 weeks actually was very busy schedule, some works and some festival. So I will, yeah, but I will make a video about multiple time frame analysis, because most of the traders in our community stuck here on during multiple time frames, because they don't know exactly which time frame they should use for the major time frame, minor time frame, and how they can use and utilize the time frame.
Okay. Cool,
Okay,
cool.
so I will make a video as soon as possible, and on the webinar, which is almost 8:30 p.m. as per the IST. So
you're having another webinar today as well?
yeah, with community, because this one is a one-to-one one-to-one session with you.
Okay.
Actually, this session is especially for the guys who are unable to identify things and facing some problem, because these all things are very new. Actually, if you are SMC trader, then you are thinking that all SMC users, I mean SMC traders, trade based on the order block post job. Okay, but these are a little bit different. Okay, so a lot of people get confused to understand things, because it's take a time to understand thing actually how these are working. That's why I'm focusing in our community to guide them one by one. Okay.
All right. Sounds good. Sounds good.
Yeah.
Well,
That's
yep.
gonna be on. Oh, sorry.
No, go ahead.
I was just gonna say that that's gonna be uploaded to the Discord, right? The webinar.
Mm-hmm.
Okay, cool.
Well, yeah. I mean, that's all the questions I had, Khan, the hiccups I was having. So you answered pretty much all of them. I just gotta now go back on the chart and back test and apply them and see and get ready for this week to see how I can utilize what was just taught and shown to me today.
Yeah. Okay, guys. So there is anything you can ask me, and I'm preparing for the weekly webinar, which is I think 7:30 after 1 hour later, which will be start after 1 hour exactly. Okay. So if you are you can join. If not, you can watch later. I will upload on a YouTube after complete the webinar. Okay.
All right.
Okay.
Was there something you were asking, Lex?
No. I was just telling him thank you.
Okay.
Okay. All right, Khan. Thank you so much. I guess being the fact we didn't get Saturday in, because next time I would like you to like quiz me as we go along. So for the next one, I want out, instead of just like you just going over it, I would like for you to, whenever it breaks structure, I want you to say, hey, what just happened here, and just like point it out for me to say it. So therefore I can have an idea, all right, is this right or is correct or not? Is this imbalance mitigation, engineer liquidity as we go along? It's almost like, you know how you put in the what's that called? the Telegram, how you put the quiz in there.
Mm-hmm.
So basically like doing a quiz, but live with me. I think that would also be beneficial to me as well.
Yeah. And from the Monday, tomorrow, I will start quiz and some weekly homework with all community. I will start because they will improve your skill actually to understand things, that how actually things working and how much you gain knowledge. Correct. So I will start from probably Monday, Tuesday. Okay. In our for Discord community, especially.
All right, sounds good. All right, well, thank you a lot, Khan. Really appreciate you as well.
Okay. Okay. So let's finish this session and have a nice weekend.
All right, you
You
too
too.
as well. All right, Lex, talk to you in a bit.
Bye.
All right. Bye.